Let's be real for a second. Most people, even the so-called pros, will never beat the stock market. Yeah, it's a tough pill to swallow. But what if I told you there's a proven path for small individual investors, people just like you, to actually come out on top? It sounds kind of crazy, right? But it's backed by decades of evidence from one of the absolute sharpest minds in finance, Joel Greenblatt. So today, we're going to break down his big secret.
So let's start with the big question. Can you really do it? Can you, from your laptop, outperform the managers of these gigantic funds who live and breathe this stuff 24/7? All the conventional wisdom screams no way. But here's the twist. The system is rigged in a way you probably don't expect, and it's actually rigged in your favor.
Okay, so check this out. This really gets to the heart of the matter. On the left, you've got the Wall Street giants. They look powerful, but they're weighed down by the sheer size of their funds. They have to invest in massive companies, and they live and die by their quarterly reports. Now look to the right. That's you. You're free, you're agile, and you have the one thing they don't, the superpower of patience. That, right there, is your edge. Let's talk about how to use it.
So how do you actually put that edge to work? Well, our first clue is all about flipping the script, turning what seems like a weakness, your small size, into your most powerful weapon.
Greenblatt has this brilliant way of putting it. I mean, think about it. If you try to play Warren Buffett's game, buying the same mega-cap stocks like Apple or Google, you're playing on his court by his rules. You're going to lose. The only way to win is to change the game entirely.
So how do you change the game? Simple. You focus where the giants can't. Greenblatt points to companies with market values under $1 billion. Now, for a fund that's managing hundreds of billions, buying a small piece of a company this size, it wouldn't even move the needle for them. It's a logistical nightmare. But for you, it's the perfect hunting ground.
And this chart, it just paints the perfect picture. You see that tiny little bar? That's the pond the professionals are all stuck fishing in. Now look at that other bar. That huge, wide-open ocean of small-cap stocks, that's your exclusive territory. It's a space where you're just not competing with the big guys.
All right, so we found our secret hunting ground. But now what? You can't just go in blind, right? That brings us to our second clue. You need the right tools. And these are the practical frameworks you need to find great investments without needing a PhD in finance to figure them out.
The number one foundational rule of value investing, made famous by the legendary Benjamin Graham, is the margin of safety. All it means is buying something for way less than what it's actually worth. The classic analogy is buying $1 for 50 cents. That discount, that gap, is your cushion. It's your buffer against being wrong.
But here's the thing. Trying to figure out what a stock is truly worth, it's pretty much impossible. You'd have to predict the future, and nobody can do that. So Greenblatt came up with his brilliant shortcut. Forget about getting a precise number. Instead, just ask this simple question. If you can get a nearly risk-free 6% from a government bond, why on earth would you risk your money on a stock that might not even beat that? It's such a simple but powerful filter.
Now, I know what you're probably thinking. Why not just buy an index fund? And look, for a lot of people, that's decent advice. But most standard index funds have this really counterintuitive flaw. They are literally designed to buy more of whatever is popular and expensive, which is the exact opposite of value investing.
So imagine an index fund starts out looking like this, right? 5 companies, all with the same weight in the portfolio. Everything's nice and balanced.
But then, one of those stocks gets all the media hype. Its price just soars into the stratosphere. Now, what does the index fund have to do? By its own rules, it is forced to buy more of that company at its new super expensive price. And it sells the ones that have gotten cheaper to do it. It is mechanically, systematically buying high and selling low. It's just baked into the system.
So, to fix this broken system, Greenblatt developed what he famously called the magic formula. And let me tell you, there's no sorcery here. It's just disciplined, common sense, boiled down into a 2-step process. Step 1, find companies that are cheap. On sale. Step 2, find companies that are actually good businesses. You just look for the ones that score the best on both measures. That's it. Good and cheap.
And the results? Well, they kind of speak for themselves, don't they? A simple, systematic approach like this has historically crushed the major indexes. And that percentage difference might not sound like a lot in 1 year, but over decades, the power of compounding turns that little edge into truly life-changing wealth.
This all leads us to our final and honestly our most important clue. Because you could have the best strategy in the entire world, but it won't matter one bit if you can't defeat your greatest enemy. And that enemy is you. This is just the uncomfortable truth of it all.
Our brains are literally hardwired to do the exact wrong thing at the exact wrong time. We get greedy when prices are rocketing up, and we panic sell when they're crashing down. We're just not built for this.
So the only solution is to build a system that protects you from yourself. It's like in the ancient myth, where Odysseus has his crew tie him to the mast of his ship so he can't give in to the deadly song of the sirens. You have to set up your rules in advance to stop your emotions from wrecking your own long-term plan. Build a system, and then, and this is the hard part, trust it.
Okay, so let's put it all together. We have our unfair advantage, playing in a field the pros can't touch. We have a smart toolkit to find good, cheap companies, and we have a strategy to conquer our own worst instincts. Now, let's reveal the real secret.
See, the professionals are completely trapped in a short-term game. They have to report their performance every 3 months. You don't. Your single greatest advantage, the one that no professional can ever truly copy, is the ability to be patient and to think in years, or even decades. And here it is. This is the whole shebang. The big secret isn't some magic formula. It's the powerful combination of a simple, proven strategy and the behavioral discipline to actually stick with it through the good times and the bad. That's something very, very few people, professional or amateur, can ever manage to do.
Look, at the end of the day, the strategy itself is simple enough for anyone to understand. The hard part isn't knowing what to do. It's having the patience to do nothing for a very long time. So the real question isn't about finding some secret formula. It's about finding the patience within yourself to let it work. Are you?